We have been talking about digital transformation, but let's listen about it from the leaders and regulators on how banking will be post-2020. And we are honored to have with us Rajnish Kumar, the chairman of India's largest bank, State Bank of India, and Sopnendu Mohanty, the chief FinTech officer, Monetary Authority of Singapore, for this fireside session. And Amol Dete, ETBFSI editor, will be leading this conversation.
Hello, everybody, and welcome to ETBFSI Converge. I must say that you will enjoy this session because this session is about how the banking will be post-pandemic. And let me tell you that I'm delighted to moderate this session because I have the most inventive and charismatic personality joining me as a speaker. So for this special session on post-pandemic banking 2020, I have Rajnish Kumar, the chairman of State Bank of India, and Sopnendu Mohanty, Chief FinTech Officer of Monetary Authority of Singapore, joining me. Gentlemen, welcome on this particular session, and I'm glad to have you here.
Pleasure to be here today.
Thank you, sir. Mr. Kumar, I will start with you. I still remember 2 years back in the quarterly result conference, you said that 2020 will be a happy year for banking. Obviously, we did not know the pandemic, we did not know the COVID-19, but considering the impact of pandemic currently, when do you see the happy year for the banking going ahead? Because we are facing a lot of challenges in credit growth, GDP is down, and borrowers are struggling to get the loans. So considering all these challenges, when do you see a happy year for banking?
2020, of course, in terms of the financial performance of the bank, it turned out to be what we had anticipated. And COVID-19, of course, was something for which nobody across the world could have anticipated COVID-19. So it is a very unusual situation, what we call black swan event. And the impact of COVID-19, of course, will be felt during the course of this financial year, which is FY21. And a lot of things are happening, and we know that the economies across the globe have been impacted. The lives of the people have been impacted. It is not business as usual. It is not life as usual. Everybody is adjusting or trying to adjust to the what has become a sort of a new normal. And it is a sort of a difficult situation in the sense that it is against the nature of the humans to live their life the way we are living today, with some sort of fear somewhere lurking in the back of the mind. So you can't act freely. And even if after the lockdowns, different countries have adopted different approach, and now the unlocking is happening. And even if unlocking is happening, whether as an individual, whether I have been able to unshackle my mind, or have I been able to behave in the manner in which I was behaving before COVID-19? So that is the question, and that can happen only when we have a proper vaccine. And I would say on the cure front, these 6-7 months, a lot of learnings have happened, and the recovery rate has improved. So that is something positive. Our doctors, medical system, they are more informed than what they were when the pandemic started, but still a protection by way of a vaccine, that is a must before everybody again can start living their life in a normal manner. So that is on the personal front, but otherwise, right, of course, the bank, we have dealt with this situation during the COVID. All the operations of the banks have been kept up and running, and that is again a very remarkable achievement. And all the staff and the people who are working at branches, they deserve the highest appreciation that they have been able to keep the banking system up and running, and many new things are being tried. So I can speak later on that. And
Yes.
I'm sure you will have many questions. How are we handling this
Yes.
situation? This is just an opening remark.
Yes, thank you for that opening remarks, Mr. Kumar. Very, very interesting. And yes, we do understand the kind of work that the banks are doing due to essential services. Mr. Mohanty, I will quickly take your perspective as an opening remark, specifically on what kind of changes are you seeing in global banking right now?
I muted myself. So I want to say that, Amol, you started saying that 2020 would have been a great year. I still believe it will be a great year, but in a different way, because 2020 is also called perfect vision and time to reset everything we did wrong. And maybe there's an opportunity to restate and redesign a new system, which is far more inclusive, far more sustainable when you come out of COVID-19. So I still have a heightened or a bigger optimism than what we see today. As Chairman said, that there is a general pandemic impact in terms of depressing economic downturn. I'm sure banks are struggling with the loan books. There is a job challenges in many market. You can see many news from different countries how job has become a critical narrative in many countries of how to create new jobs. So I think in that context, large part of recovery will come through financial sectors where they respond to this. And I think one of the most obvious response will be how do we digitize, how do we take the advantage of technology to make things better.
Right.
And the good thing is that it will be faster. If there is a recovery plan anybody has, they're going to use technology as a way to engineer that recovery. It'll be faster, it'll be better and far more sustainable. And I'm also saying as we speak, people are redesigning their financial services right through the crisis. We are very glad to see that a lot of consumer behavior have shifted to use e-payments as a way to do things. I think it was a struggle before the crisis where banks were struggling to get people to online behavior. Now this has become a natural force or a way to get there, and having that behavioral shift gives banks a unique ability to push the online agenda further. And more they get offline to online, the cost structure of the banks should definitely get better as we think about a reconstructed financial sector coming out of the crisis. That itself is a huge opportunity. Then with electronic payments becoming part of our lifestyle, and that leads to much better data. That leads to much more holistic financial services can be provided. And if I can stitch from a payment to a lending to helping the small enterprise to have a much more comprehensive financial sector plus other industry support to truly build a much more well-connected, inclusive digital economy, I think there is a better recovery chance with what we have today. So from a global banking perspective, more technology, a redesigned product, empathy-driven, sustainability will be given priority over efficiency and productivity, because efficiency and productivity is already built into a digital transformation. So you don't have to do anything special, but sustainability and long-term, what I call focus on building a greener finance models, much climate friendly services will be part of the big discussion in the global financial community. Resilience, and just to not to forget, resilience will be a big part of the thinking. And I think you and me exchanged some notes that during crisis, look at what happened. The pension structures were not enough to support people to get to the crisis. I hope as we come out of the crisis, we'll have far better pension structure, far better risk product, far better micro insurance product, so that we can all get ready for the next pandemic. I hope it never comes, but if at all it comes, we know how to deal with it.
Right. I think your perspective was very, important in terms of how to deal with the next pandemic, whether it comes or it doesn't come. Mr. Kumar, I will take, your perspective now, specifically onto digital transformation, all the globally, in fact, and we have seen SBI also doing a, important digital transformation. SBI, is importantly doing a lot of things, but my question on what kind of digital transformation do you see going ahead, not 2020, but 21, 2022? Because every bank has, for example, recently a CEO of DBS Bank said, I'm hiring more engineers than the bankers. That is one important thing that I have, taken, I have copied So at SBI, what kind of transformation do you see going ahead in 2021 or 2022?
You spoke about the digital transformation which is happening in the bank.
Right.
It has been going on for quite some time. And in fact, our platform, you only need one. It also started about 4 years back. And since then, in fact, on November 24th will be the third anniversary. So within 3 years, we have created a fantastic platform where the users on the platform, not only their banking need, but their investment needs and the online shopping, which is very, very popular. So we are providing a one-stop shop.
Hmm.
And just to give you an idea about the scale and the range of services,
Hmm.
every day now we are registering new users, 70,000 of them.
Okay.
And we have reached a figure of now 2.7 crore registered users within a short period of 36 months, and still there is a huge potential. And because of COVID, this rate of new users getting registered on it has gone up. And it is what I have found that in digital, it is ultimately one is the convenience, second is trust and the security. So from a State Bank of India customer perspective, because people have a huge trust in State Bank of India, and on the top of it, in terms of designing, we have used the best minds from our partners like McKinsey, IBM, our own people. It is a fantastic. But then digital is not only about transaction, as Sopnendu was mentioning. It is about your capability to use the data analytics. And again, today, for example, using the data, we are able to offer now pre-approved personal loans. We are able to offer pre-approved business loans, and a lot of data analytics is going in the background. So that is the power of digital. And today, whether we are open or closed, almost 70 to 80 crore worth of loans I disburse daily, even including Saturday, Sunday. And this is still like we have not completed that journey. So we are preparing a B2B platform, Bharat Craft. The work has started on the right earnest. And the vision is that all the MSMEs and the businesses in the country, we will bring together on this platform and on the spot facility to finance the receivables. So that is the vision. And say for example, Krishi, where for the farmers, first time such a huge technology intervention is happening. And today I have 75 lakh farmers, and every year they renew their loans, Kisan credit card. So now a farmer, if they have a smartphone, in 4 clicks, they can, renew or review their account. If they don't have that, they can come to the branch and the same process, same time. So it is a really omni-channel presence. And the work and the investment which we have put in, at that time we didn't know that COVID will come. But in this scenario, it has come very handy, and it is profitable in the sense that whatever investment we are making, we are getting a very decent IRR on this. Only thing is that because it is sitting in the bank, so that does not get reflected in my valuations. I always say that if it was sitting outside bank, my valuation would be I don't know how many billions of dollars, maybe 40, 50 billion dollars only for giving the valuations which the startups get. So is the biggest startup by a legacy bank.
Very well said, and we can see the importance of digital transformation specifically from SBI, because when SBI does, obviously the other PSU banks also follow. Mr. Mohanty, I would like you to guide us specifically on the regulation part of the digital transformation. Yes, many banks and the financial institutions were going really high on the digital transformation, but in last 5 to 6 months, they are really aggressive in terms of adopting digital. How are regulators looking at it?
Good you brought this point, because I will give you a story behind this. Right at the edge of the crisis, you'd expect banks to run massive campaign on digital transformation, right? That's you'd expect, because they would expect more technology, a better way to respond to the crisis. But to my knowledge, the first group of people or a segment of institution which went aggressive on adopting technology are the regulators themselves. The G20 tech sprint, which was by the G20 Secretariat in partnership with the Bank of International Settlement, ran a global hackathon of more than 100 central bank participating globally. They put together 3 problem statement, and they got 50 plus countries participating to help regulators to come up with solutions to do their own job, starting from reg reporting to market monitoring and to supervision. So you can see the regulators are also worried that during this crisis, their ability to supervise would get severely hampered because with low touch, no touch, and you can't go to a bank and sit in chairman's office and do an audit. So with all this physical distance, going physically but not to interact, it also worried regulators. So they also latched out into this bandwagon of using technology, RegTech, SupTech, as a way to deal with this situation because of the crisis. So pandemic, in a way, also enlightened the regulators that technology can be a remarkable tool to do their job. Not only that, because of the challenges for macro surveillance requirement, they need to process a lot of data. A lot of market data has to be processed, and there's all digital data. So they need AI and all these things to process this data to give a sense of market trends and market risk. So I think in a way, pandemic did give regulators a feel of the power of technology, and they ran a campaign. In fact, the campaign is ending in a month's time, and hopefully, and India participated heavily in that campaign as a contributor to RegTech SupTech solution challenge. So hopefully, in that process, there is a definite change in the way regulators look at technology globally. I'm not talking Singapore, I'm talking every part of wherever central banks are operating in the space. So that one piece, RegTech, SupTech becomes part of a common narrative. Now back to the banks and FI's own initiative of adopting technology. With this change, I think they are far more encouraged by the regulators now to go and adopt technology. The regulators are pushing for more e-payments. The regulators are pushing for more data-driven choices on the lending side. I think that there is a symbiotic relationship now between FIs and the consumer and the regulator when it comes to technology and innovation. However, I think there is still a certain unfulfilled, unmet gap in this space. And in my mind, and I've spoken in many times in my earlier discussion with you, Amol, is that how do you encourage FIs to shift some of that tech spending from giving money to large tech provider to small startups, B2B startups. I know Chairman is here and he's the largest consumer of technology in India. I think my request to him or his fellow bankers, CEOs, that how can they create some kind of fund which will allow collectively FIs to adopt small fintechs, B2B technology as part of their technology construct. I think that signaling can create a faster adoption of technology, help the economy, help the new ideas to be part of this change. And I think I'm pretty sure RBI will support such initiative because there's one undiscussable item there is the procurement guidelines. When you talk about buying technology for a 2-year-old startup, there is some inherent risk which regulators are always worried, and they will penalize the bank if they don't do a proper due diligence. But where that balance comes is an unfulfilled task. I think once we get that sorted out in a thoughtful way, I think perfect timing where the 3 parties will come together and hopefully they will drive the new transformation.
Thank you for that meaningful answer, Mr. Mohanty. And yes, SBI has in fact a lot of partnerships with fintech companies in India, and many fintechs in fact are keen on joining, SBI in terms of providing their innovation. Mr. Kumar, if you could tell me more on the partnerships that you have with the fintechs and the big techs going ahead, because you said that 70%, 70,000 loans you have been distributing on lending platform. SBI, is doing a lot of things. Going ahead, what kind of partnerships do you see with fintechs, big techs, and all these tech companies that are coming up? And also, how much portion of regular banking will shift to a digital, specifically for SBI?
One is that as far as the big tech is concerned, you name any company across the world, they are our partners. Be it Microsoft, be it IBM or TCS, in any case, are our technology partners since 2004 for core banking, Tech Mahindra. You name anybody, they will be partner of the State Bank of India. About the fintechs, we also have a very active procurement program where we don't go through the normal, what we call CVC process. There are guidelines by Central Vigilance Commission, but we have consciously decided, and that is with the approval of our board, that up to an amount of 10 crore we can procure from fintech. And what I have found, and in fact we had 2 days session with many fintechs where they came and made presentations to the board, and very impressive. And based on those discussions, we are doing a lot of work in the area of, say, cyber security, in the area of the digital lending, fraud prevention. And I think it is, you can enjoy best of both worlds, in the sense that what I have found that they are brilliant in terms of the in the kind of software they have developed. They're immensely useful, and particularly in the area of cyber security, we are finding great value there. And these all are the startups which are coming up. Some of them have reached some sort of a maturity where their valuations have even soared up manifold. And we are actively even considering that some of these fintechs, we pick up the equity stake also. So we have an active program. Only thing where the issue comes up is that many a time I have found that when it comes to scaling up, then they begin to falter.
Right.
And second is that the response time, because say our product requirement, it keeps on changing.
Right.
Then I find that they don't have the kind of resources which need to be deployed. So we have a platform, and where we use it for our small value loans. Now in COVID-19, we wanted to make some changes very quickly. And suddenly I find that they don't have the capability to make those changes very quickly. But these are some of the practical difficulties. But I believe that this is a great model where the innovation capability of the fintechs, in fact, is much more than big techs in many areas. And as a user bank, we can take advantage in both ways, or rather 3 ways, I would say. One is the pure procurement, where we have a certain cutoff up to which we can do on nomination basis. Then if we find value, we can invest. And third is a pure partnership, pay-per-use sort of relationship.
Right.
Well, if I can just, if I can
Sure,
add
sure.
something, I almost forgot to say that here. During the crisis, we were, from a MAS perspective, we are asked to respond to that fintech community, how they can survive the crisis. There are these 3 problems. There are a cash flow problem, there are a customer flow problem, and there was a capital flow problem.
Right.
And the cash flow problem was essentially keeping the payrolls on, and so that because during crisis you get that. And we had a customer flow because they couldn't go and do no more sales. And then we have a capital flow issue because investors were holding back on the commitment.
Right.
So one of the things we did, which really worked well from a regulatory stance perspective, we actually put together a few incentives in the market. First thing, we put a fund where we incentivize any banks buying or you working with the fintechs. We will cover up to $80,000 of POC funding.
Okay.
We'll fund that because that created that partnership to come in.
Right. Right.
We also put together a regulatory assessment guideline, which means any fintech wants to do a regulatory assessment about their own capability against banks' expectation, they can self-assess themselves. And when the fintechs went and did the self-assessment, they realized what Chairman is saying. Oh my God, we have to ensure that we have these things because banks are expected to follow certain standards and resiliency while they work with tech partners. It helped this fintech company during the crisis to take a step back and start thinking about how we build and close this gap, because you can't one side complain that you are not getting banks to buy your product. Same time, banks had certain regulatory expectation. You don't want to match to it. But what we found out is not like both parties were not interested. I think the parties were interested, but there's no mechanism to tell them what they were lacking. It is always after a long sales cycle, towards the end, they'll realize, oh my God, they're missing all these issues, all this expectation. So having a self-assessment upfront helped a lot of fintechs to reconfigure themselves and then subsequently come back and have a better sales process. So there are other things we did, but I just want to re-emphasize what Chairman spoke about, that you can't always expect the banks to treat you small rest of your life. Some point in time, you have to be big. And to big, you should build your systems and resiliency as per bank's expectation.
Okay, thanks for that note. But Mohanty, if you could add more on the regulations part, because the big challenge for the regulators is also to regulate the fintechs and big techs. At one side, they can simply say that okay, they let bank take care of it because ultimately bank is partnering with them. But is it going to be tough for you when specifically banks are thinking of okay, can Swiggy deliver my saving account to a customer along with the food? When that is the what I can say visualization that the banks are having, how tough will it be for you to regulate them?
I have a view on this, and my view is that instead of trying to regulate a random event, I would rather think about building an infrastructure where you don't need to regulate these things. I think let's take your example of somebody delivering cash along with food. First thing, why do you need to deliver cash? I mean, you have to start thinking about is there a better way to do things rather than delivering these things? I think one of the focus which I think is important from a regulatory perspective is to start working with the governments to build or improve the national infrastructure for things which banks struggle: KYC, customer onboarding, validating customers, sanction screening. There are the whole set of data layer which I think banks have to restore to some kind of a semi-automated process. Can that be offloaded from the bank's onerous process? And can it be transferred to a national infrastructure with proper liability built in as a way to help this process? But to your point, there are some endpoint regulations required. How do you manage cybersecurity? How do you manage data protection? How do you ensure that your activities are not outside the regulatory permissible activities? There are things out there which the regulators will definitely look at regulating them. In Singapore's case, we did spend almost 3 to 4 years in regulating our payment sector, because previously it was like one big regulation. Now we have broken down to 7 pieces of regulation to capture the whole gamut of payment fintech. If any fintech comes to Singapore, they will get regulated under some modular structure so that there is a certain market stability because of they're being properly regulated. So there are this evolving regulatory structures which is coming in to protect the market infrastructure, to promote stability. But this is an evolving process. But I want to re-emphasize, Amol, I think the focus in this during the crisis is to go back and help the banks to build common shared national infrastructure, which will bring down the cost structure of the banks, which is still out there.
Right, Mr. Mohanty, Mr. Kumar, sir, we discussed about the digital transformation, but the major challenge which the economy has is how the demand will come back, how the lending will be in 2021 and 2022. What is your outlook there? Because when you say that you are going to lend on a case-to-case basis, there are borrowers who are raising questions, and there are banks who will say, okay, we have to be at a precautionary level as well. So how do you see the 2021 and 2022 specifically now going ahead?
As far as the lending is concerned, so we have to look at that, what are the supply side situation and what is the demand side situation. So supply side situation, as I said, that there are different customer segments. On the one hand, you have retail, you have micro and small enterprises, you have agriculture, and the other side is the corporate.
Very, very interesting, sir. Before we wrap up, I will just take quick 1 or 2 questions with you, gentlemen. Mr. Mohanty, to start with you, what next? We have seen enough digital transformation in the banking sector and financial institutions, very, very aggressively, and many things are already there. Lending is happening instantly, payment is already there. What next in financial innovation that you see?
Thanks for asking this question, because there are certain things happened during the pandemic which perhaps missed a lot of people's attention. you would have realized quietly
Hmm.
there's a rise of digital ledger technology during the crisis. For example, I would say is a moment of historical moment which would trigger a shift in the architecture of financial system. For example, the Philippines government issued their government bond on a DLT registry. Quite a move in this crisis to go into a DLT platform to issue your treasury securities. Right in Singapore, a company called Bond eValue started fractionalizing bonds for retail investor to able to buy into the bond market and also able to trade intraday. Also, same time in Singapore, as of 2 days back, HSBC, Temasek are looking to put fixed income issuance onto the platform. And what it means that, at least in the capital market side, is the institutional banking side, you will see a shift to the distributed ledger technology platform. And it is going to happen very fast because the people have taken advantage of in a positive sense, of this market condition to focus on the future architecture. But what underlying that is more interesting to me, because this digital asset will require a matching digital currency in the wholesale side. And I think there would be a time, which is very soon, that central bank will start blessing the wholesale digital currency, not retail, the wholesale digital currency, which will become the fuel or the underlying payment instrument which facilitates this digital asset transfers. So atomic swaps of assets will become, and the digital currency will become part of that equation. I think that to me is a significant shift, a dramatic shift on the market side, and putting some effort on the retail digital currency. I think we have to watch out, because there is no compelling reason why you should issue a retail digital currency, because there is no real use case in many markets, other than there are cases where you are doing direct benefit transfer. Is there a space for digital currency to be used as a faster way to send money? But that to be watched and seen, and I'm sure some country will be an epicenter for driving this. We'll watch it out. But I want to end something. I think one thing we all owe our financial system, which we have not done a good job, is that we have not fixed a long-term problem of fixing the pension structure, pension product. Micro pension product, micro insurance is still a long gap. I think instead of talking about a futuristic technology, we have to find a way to solve that problem. We need perhaps a different market infrastructure, maybe a different asset manager who can help to build the capacity to bring down to people risk products which they can use during crisis. And to just wrap it up, in my mind, that we should not forget that end of the day, we can recover faster if the micro SME and SME recover fast. And I think if we can get them to this digital platform faster, we can find the SMEs and micro SMEs have access to digital finance, what Chairman spoke about. I think together with the DLT coming as a market infrastructure with the digital transfer of SMEs, better risk product, we have a great 2020 to look forward, which is a perfect vision of the future.
Thank you, Mr. Mohanty, for sharing that vision with us. And Mr. Kumar, your last comment specifically on the customer service, which is one of the very, very critical and crucial aspect for every financial institution and specifically bank. You being the largest bank, what kind of changes are you going to do in the customer service going ahead? And more importantly, sir, what kind of changes are you also going to do, to reskill your employees? Because if they are reskilled, they are in a better position to offer a better customer service.
No, definitely very well said that we treat our employees also as customers. So that is the philosophy. And even for any initiative we take, even digitization, first is how does it benefit my employee? Is he finding the process more simple? Is it leading to more productivity gain? So why YONO has been so successful? It has been successful because the employees or the people who are at the front, they have adopted it because they find it very convenient. And about the customer service, it is a sort of a, I would say, lot. Lot means one is what are the channels of service, and whether each of the channels, whether it is branch, digital, ATM, whatever channel the customer is using, whether it is in the best of the class, convenient to use, secure, safe, and does it give to the comfort to the customer. And mind you that I have about 45 crore customers to serve. So not an easy task. The major shift which is of course happening is that from branch channel, for most of the things, customers are moving to the what we call the alternate channels, and digital channel has become very prominent. Today, 55 out of 100 transactions in State Bank of India happen on digital channels. Then you have to have a very strong system that no mis-selling happens. Third thing around the customer service is the very strong customer grievance redressal system. So there are I would say that multi-pronged strategy which bank is following, and that includes that when the customer comes and interacts with the branch staff.
Okay.
Most of the issues around that particular time or the spot when a customer is interacting with our staff, and that is always the most challenging task that the customer gets a very satisfying experience. Rest of the channels, digital, it all depends upon how you design and whether they are always up and running. If the downtime is zero or should be near to zero, then I don't think that it is all about again experience. Another thing is that bank has adopted omni-channel strategy. Omni-channel means that the same service you can get either in a self-service mode by using your own mobile, which is the big thing which is happening, or assisted mode when you visit any of my customer touch points. And in terms of we very closely track the number of customer complaints, and I'm happy that the graph is showing a downward trend, huge. In last 2-3 years, the number of people or the number of complaints have come down very a very intense root cause analysis that why complaints are arising. So I think the entire focus of the bank is that if we are able to have satisfied customer base, and I'm not saying anything new, every organization knows it that if you are not having your employees and customer at the center, then you can't grow and flourish. And the satisfaction which all of us have in a state bank, that we are adding customers. So despite a customer base so large as we have, but every year we add more than 1 crore new customers. So that itself is an indication that bank has been able to provide, I would say, reasonable standard of customer service, which always needs more improvement. But if we were not providing a satisfactory customer service, and in a competitive environment in which we are, we would not be able to add as many new customers.
Very well said.
Amol, I just want to be a little, I couldn't help myself to say this. One thing India will do more, I think, in my mind, is India may actually end up in building alternate collaterals, which in a digital form, like tokenizing livestock. They may become a new set of collateral which banks like SBI can use it to extend the credit line. I think India has a huge opportunity coming out of pandemic to think about at a federal level how to build national platform to tokenize a lot of alternate collaterals. That could be one way to look at it.
No, very good idea, I think. Right, so we are in exciting times. So, despite the pandemic, and this will go, all of us know that it can't remain. And the next pandemic, we don't have to worry because it will be in 2020, 21-20. So let us not worry about it.
Sure. Very insightful, Chairman Sir and Mr. Mohanty. Thank you so much for sharing your remarkable insights, and thank you so much for taking part into ETBFSI Converge. Stay tuned, stay connected, and more importantly, stay safe. Thank you so much.
Thank you, speakers, for such an amazing session. You can also, of course, add reminder to receive alerts before any of your preferred session starts. And also feel free to use the comment box during the session to get on-the-spot answer from our subject matter experts. See you on the other side.